A very good afternoon to you, Tom. Some growth coming through for the insurance sector, up 15.9% in 2011.
Yep, that's what we were able to record in 2011.
Could you
but certainly is a drop from the 23% that we recorded in 2010.
Like you say, there's a drop coming through from 2010. Could you kindly talk us through some of the challenges that the industry is facing?
We have a multiple of challenges. Of course, one of them is a national one, in the sense that the purchasing power of the biggest portion of the population is quite low, and therefore they are not able to consume insurance as much as we would expect. We also have challenges in terms of consumer information across the country, particularly so in the rural areas. Other challenges relate to, and this is an international challenge, I don't think it's specific to Kenya, it's on issues of fraud, which is reasonably rampant in the insurance sector. We also have a challenge in the sense that with a small so-called urban insurance market, and with about 45, 46 insurance companies competing for the same business, the level of competition is very, very, very high, which to a very large extent has led to price cutting, and probably maybe a host of other challenges. But despite all that, the industry has been able to grow at an average of about 15% in the last 10 years.
Looking at perception about the sector, we know that penetration is pretty low when you're looking at individuals, with the impression of the insurance industry not really good amongst Kenyans. But what is the organization doing in order to improve the perception of the insurance industry at this stage?
One of our major involvements as an association is consumer education. We've been very active. If you look into our history, even if you go to our website, you'll be able to note that the biggest budget for the Association of Kenya Insurers goes to promotion of consumer education. The other area that we spend a lot of our time and resources on is research, so that we may be able to identify gaps, market gaps, where then we're able to direct our members in terms of where they need to, the areas that they need to exploit most. Those are just to mention a few. Those are just some of the tasks that the association has been involved in the past, with a view to growing the insurance business there.
Looking at regulation within the sector, we know that the new insurance bill is being put together currently by the Insurance Regulatory Authority. When can we see this bill coming through, and what kind of improvements can we perhaps see coming through for the insurance industry and perhaps the consumers once this bill has been passed?
Well, I know it has taken quite a bit of time to get into the new regulatory framework, or in other words, coming up with an insurance act, but that has been with a very good reason. Currently, we are just about to get the bill drafted, but despite the fact that the bill is likely to be drafted in the next maybe 4 or 5 months, we still have this very strong feeling that it may not be able to get to Parliament until the new government is elected in March next year. So we're probably looking at maybe June, July, August next year as the time that we are likely to have a new regulatory framework. Now, to answer the second part of your question, one major departure from the current regulatory environment that we are likely to enter into in the new dispensation is that We are moving from a compliance regime, or we will be moving from a compliance regime to a risk-based regime. Risk-based provision, risk-based park capital, risk-based anything, you mention it. So we are likely to see a major shift from the way insurance business has been transacted in the past, from a regulatory standpoint, going into the future.
Well, that's where we have to leave it. Thank you so much for joining us. That was Tom Gichuhi. He's the Executive Director of the Association of Kenya Insurers.